What up? What up, Jason? Dude, thanks for tuning in. Stack! Let's go! Stack those likes! Woo. Man, it's been an exciting day. Exciting day today. Hope everybody had a great weekend. Let's jump into this. Let's get into this right away. Whew. We're going to talk a little bit about the... we're going to stick to our plan. We're going to talk about Bitcoin. We're going to talk about the properties of money and how Bitcoin meets those properties. And today we're going to talk about the durability. So money should be durable. We're going to talk about how Bitcoin is durable and how it meets that quality of money. But that'll be in the Why We Stack segment. Right now, we're going to get ready to go into the SATS strength, where we check to see how many Satoshis we can buy for $1. There we go. Alright, so as of today, it looks like it went up because Bitcoin dropped a little bit, but we can buy 3,883 Satoshis for $1 US. So it lost a little bit of buying power, but not a lot. I think the overall trend is still this number will continue to get smaller as the dollar loses purchasing power. So that was SATS strength. All right, guys. So welcome if you're coming in. Fat bags. Let's go. Nice. All right, so that's that strength. Let's get into the topic for today. That is, I'm gonna end that song and I start the next song, which is the segment I like to call Why We Stack, the Orange Pill segment. If you're new to Bitcoin, this is the stuff you want to kind of start learning. You can get the full write-up on this if you go to bitcoin.org. Bitcoin.org. Go read the white paper. It's gonna have a lot of cool information for you. Okay, so and this version of Why We Stack is not very ranty. It's more educational. So we're gonna talk a little bit about why does a Bitcoin have value, right? So a Bitcoin has value because we use it. Bitcoin has value because it can be used as a form of money. And in order to figure out what can be used as a form of money, money's got to have certain qualities. So Bitcoin has the characteristics of money. The characteristics of money are as follows: durability, portability, fungibility, scarcity, divisibility, and recognizability, I guess. Yeah, like people see what it is and they recognize and accept it as a form of currency, right? So today we're going to focus on the durability property of money and how Bitcoin meets that quality. So in order to be called money, it's got to comply with all of those properties. Okay. So Bitcoin has durability because it lives on the internet. There's no physical thing you can destroy, so it's indestructible, right? It lives, guys. When we break it down to like basic, all Bitcoin is a list of is a bunch of coins that we track on a ledger. We track on like a sheet that says Jason owns this many Bitcoin, Roman owns this many Bitcoins, but it doesn't even go by name. This goes by a wallet address, an account ID. It doesn't have any of your private information. It's just an account ID, a wallet ID, which is an account on the Bitcoin network. And everybody on the Bitcoin network knows how much each account has. You just don't know who owns those accounts, right? But it's durable because it wouldn't be durable if all of that stuff lived on one computer and that one computer got hacked and then everybody would lose their accounts, right? It's durable because it's not on one or two computers. It's on all the computers that are running the Bitcoin network, all the nodes. And at this point, there's like, I would say like thousands, hundreds of thousands, right, all over the world in different countries. And as long as they have an internet connection, they can communicate with each other and let each other know, hey, Roman sent Jason a Bitcoin. So let's make sure everybody removes one Bitcoin off of Roman's account and adds it to Jason's account. And that information gets sent out to all of the other machines, all of the other Bitcoin nodes. And it's kind of like there's so much redundancy that in order to destroy Bitcoin, you have to destroy every single computer that has a copy of the Bitcoin ledger, right? And all at the same time. So you have to take out every single copy of the Bitcoin network at the same time. And even then, if somebody has a backup of one, we can restore the network up to a certain date, right? So it is it takes advantage of the original true intent of creating the internet, which was like the ARPANET. And the reason the ARPANET was around is because the military wanted to have a way to have redundancy. If West Coast got bombed, we would have an East Coast server of important government stuff that would protect the country, I guess, right? And so that idea is what spawned the internet. And so once you get stuff on the internet and it's decentralized and you have copies of it everywhere, then it's really hard to kill it, right? It'd be impossible. And at this point, Bitcoin is not just in the United States; it's all over the world, right? So, and it doesn't take that much hardware to run a Bitcoin node. It can run on something very, very small and simple, and you don't need a lot of storage to store the whole Bitcoin ledger. So the whole Bitcoin transaction log and all of the history of Bitcoin is under 1 terabyte, I think. So a lot of computers have 1 terabyte, right? So that's all you need is a terabyte of space and a little bit of processing power, right? To run a node, not to run an actual miner, but to run a node, right? Even if all of the or most of the miners in the world got took out, the algorithm for Bitcoin automatically adjusts its difficulty every 2 weeks, and it can always accommodate for lower hash rate or higher hash rate, right? But when we have a higher hash rate, it makes it's proof that there's more people involved in Bitcoin. So the higher the hash rate goes, the more security the more secure the Bitcoin network becomes, and it's really, the difficulty right now is at all-time high, I think. So it's definitely showing that it's growing. So it's a positive thing. But anyway, back to the beginning of this little segment, little teaching segment. Durability means that it lasts, right? That it doesn't get destroyed. And out of all the currencies that have existed ever, Bitcoin is like indestructible, right? You can destroy a dollar bill. You can probably destroy a coin, like a gold coin, but it's still gonna be gold, so you can't really get rid of it. But it's physical, right? You can still seize it and you can still take it from somebody, right? But anyway, back to the durability. I think that's pretty much covers it, right? Unless there's any questions. But yeah, that's pretty much it. So like, what we're gonna do the next couple of days is go on to the next topic of the characteristics of money and how Bitcoin meets and exceeds those characteristics. Okay, so tomorrow we're gonna cover portability, and then I'm not sure if I'll be able to do a show Wednesday, Thursday, and Friday. We have like a family thing that we need to get to, and I don't think I'll have my computer with me to be able to do a live stream. And since the channel is so new, I can't do a live stream from my phone. I might take a laptop and try to sneak it in, but it's highly likely that I won't be able to because I'm doing something with the fam. So I'll let you guys. Yeah, pretty sure tomorrow. So today we're gonna DCA, and tomorrow we're gonna DCA on the show, and then I'm gonna DCA the rest of the 3 days of the week, So Wednesday, Thursday, Friday on my own, and I'll just do a recap on Monday. So show tonight, show tomorrow, and then we're going to take the rest of the week off because I need to go do some stuff. But I will be back the week after that for a Monday through Friday. We're going to continue to DCA. Okay. So that concludes the Why We Stack segment, because Bitcoin has durability. Okay. It'll last forever. It can't be destroyed. And it'll literally, for as long as there's electricity and computers, it'll last forever. Right. Okay. So let's jump into let's jump into the stack recap. This is where we review our status of our position that we built during the show. Today's actually a special episode because it's the 10th episode of the show, and let's see how we've been doing. Okay, here's our spreadsheet. Today's a unique day. We're down the worst we've been the whole time we started the show. We're down 4.386%. I'm okay with that because I know I'm in it for the long term, and it's all about stacking sats. The more we can get at a cheaper price, even better. Okay? Because the thesis hasn't changed. As long as the government keeps printing money for nothing and chicks for free, the value of our Bitcoin is guaranteed to go up because it's going to take more weak dollars to buy the same amount of Bitcoin. Okay? And so we keep buying sats. So today we're down 4.36%, but it's okay. We've been actually the lowest point we've ever been. The lowest point was a new low for us at 25,757 since we started the show. I'm going to implement a new rule to the Stack Sats show DCA strategy. If we hit an all-time low since we started the show, then we're not going to do $10. We're going to double our double. So we're going to quadruple from the base. Our base is $5 each time for DCA, but tonight we're going to be dollar cost averaging $20 instead of the 10 that we'd normally double. Okay? So here we go. Let's get into that. Back here and jump into the Stack Sats segment. Let's go. All right. So we're at 25,7. Yeah, let's get this buy going. $20. It's gonna be like $22. At the current market price of $25,818. I'll try to do it a little bit. Okay, we have our buy. Let's update our chart. Okay, look at that drop. So we'll copy this guy here. 25,820. And for this one, we went in at $21.94. So $21.94. Did a quadruple DCA on that one because it's such a low price. On the 5th June. Okay. It's pretty good. Okay, now we have to split it up over here. Let's go to our spreadsheet. What up, Leonard? Let's go. Thanks for jumping in, Leonard. So we're doing a quadruple DCA, guys, because Bitcoin is at an all-time low since we started the show. So we're down about 4%, 4.3%. Let's get our buys in here. Let's see. What up, Carl? Nice. Thanks for jumping in, Carl. So we're down 4.36% because Bitcoin dropped. There's an issue going on with Binance. It's one of the bigger. It's a big exchange. I'll explain that in the Q&A segment if you guys are curious. But it's the first time that Bitcoin's been this low since we started the show. So since it's so low, instead of doing the double amount, we're gonna do a quadruple amount. So we did $21 and what was it? We did $21.97. $21.90. So they're $5.49 each. Was bought 4 times. Dang. 6, 5, 23. Nice. Look at those likes, guys. Slamming the likes. Nice. Stacking the likes. All right. And we bought it at 25,820. Damn, what a deal. What a deal. 25,820. When big exchanges that have nothing to do with Bitcoin itself get into problems, it scares everybody and they start selling stuff because they need to cover stuff, or it just the way it works out. And when that happens, it does affect the price of Bitcoin, but not in a real way. Like, it's just fear, right? So when that happens, we gotta take advantage. Because Coinbase going out of business has nothing to do with Bitcoin, with the way Bitcoin works, or with what it is, right? That makes this copy 1, 2, 3, 4. Copy. All right, that's a lot of satoshis right there. Look at that. Each $5 buy, or about $5 buy, instead of getting us just the usual 18,000 or 19,000 satoshis, it got us 21,250 satoshis. That's pretty awesome. It's pretty awesome. What? Yeah, dude. Salty, that new miner is rock and roll. Thanks for jumping in here too. It is. I have 2 right now. I have 2 S19Js. S19J Pros. But those are working, getting me that what is it called? Non KYC Bitcoin, right? Okay, so we got our, let's put it into our chart here. Let's put it into our chart. So now that we bought in at that level, let's update our chart. Okay, here we go. So our average from our last average is over here. That is 26,907. So let's change this one. 26,907. Now this will be today's average, and then this will be the new average. And the new average for us is 26,678. 26,678. Oh yeah, see, look at that. It bumped us down a lot. So our average changed almost 1%, right? So now if Bitcoin comes up to this level right here, which is the lowest we've bought so far. No, not the lowest. Oh, never mind. It's way down here. Anyway, but if Bitcoin comes up to here, then we're already in profits for all of these up here, for all of these buys. Anything above the orange line, we'll be in profits in when Bitcoin comes here. So this is our break-even line, basically. Our average buy price is our break-even line. But we're not selling. So that's the whole point. That we're not selling. We're just kind of like keeping track, so you know, like if I mean, I buy to save and keep forever. But if you're buying to save for like a car down payment or like a car outright or like a house down payment, then you'll know when your break even is, like when you'll be in the positive, right? So it's pretty good. It's pretty good. Yeah, that $20 spot, I wanted it to lower the average. Do you run 24/7 only when solar is only during the daytime, salty when it's sunny? And I stopped day trading, salty. I don't day trade at all anymore. I just buy and keep. And if I see it dip a lot like today, I have orders in to like buy extra when it dips. But I'm still doing like an additional like DCA, like I have like a stack that I do on the regular, and I just know that I'm buying that amount every day. And then if something unusual happens like today, or like you got this huge dip, then I had some orders that were pretty close. Sorry, I have some orders that were pretty close to there anyway, so I just bumped them up a little bit and bought at like down here earlier today. But basically the same thing I'm doing here on the show. I'm just that during the show I only buy it like around this time, so like around 8:30. So the time is consistent. Like on this, like when this happened, I saw this dip happen, and I could have bought down here if I would have bought a little bit before the show started, but I ended up just waiting for the show to start, and then by the time I bought, it was like back up here, right? So I mean, it just, the whole point of the show is to show that it doesn't matter what the price of Bitcoin is. The whole point is that you're dollar cost averaging. And the way we're doing our strategy is we're dollar cost averaging. If the current price of Bitcoin is above our average buy price, then we're only buying $5 worth. But if it's below our average buy price, then we're buying $10 worth. Today was a special day because it was an all-time low for the show. So in that case, we're buying 4 times. So spent $20 instead of $10 today. Today should have been a $10 day, but since it's so low, we did 4 times as much, so $20 to get our average to move down. All right. It's just like a cheaper, better value, I guess, a better deal. And it might drop down even more, and then I'd be like, oh man, I should have just done 10 and 10 and 10. But we'll see. If it keeps dropping below this, as long as it doesn't get the orange, we're gonna buy $10 worth the rest of the week. But if it goes above the orange, then we'll be back at $5 buys. Okay. All right, that's a stack segment. Let's go. and that's it. Is that it? I think that might be it. All right. So let's get into this. What is it? Is that it? Browser. Yeah. I think that's all I got for you guys. We stacked. We did a little Bitcoin information. Not a lot, just about 5 or 10 minutes worth. I'm not going to overwhelm you. I want to keep introducing little concepts one day at a time. And if you guys have questions, put them in the chat. We can discuss those questions after the end of the show. If you're watching the replay, you can. We're going to end the show, but we're going to continue the show afterwards, just with some Q&A, just hanging out and hanging out, talking about random stuff. And we're going to probably talk about the Binance lawsuit after the credits are done. So, well, thanks for watching. I'll see you guys tomorrow at 8:15 p.m. Pacific Standard Time, and then where we'll be stacking SATS. So I'll see you then. Thanks for tuning in. Let's go. Right? Did they leave? All right, they're gone. All right. Yeah. So, middle of the day, I see this news alert that the SEC is suing Binance.com for selling unregulated securities, right? And I'm like, oh snap, here we go. So they're claiming that anything that's, they're claiming that a lot of tokens that Binance sells are unregulated securities, right? So, and they're also accusing Binance of doing a bunch of other stuff with people's money and like commingling depositors' money with their companies' like reserves and a bunch of other things, that to the point where like the SEC sues Binance, and as of earlier today, they were trying to get a, what's it called? TRO? Temporary restraining order against Binance to seize and to freeze assets, right? And the only reason I haven't gotten it yet was because the case just got opened this morning, so it's so new that they didn't even have a judge assigned to them yet. So once the judge gets assigned, they're going to request that temporary restraining order, and those are supposed to be, the level of things you got to prove are a lot more difficult. The level of things you got to prove in order to get a temporary restraining order like that freezes everything, it's more strict, so you need to have a lot more evidence to be able to even ask for that kind of restraining order. So just the fact that they're asking for it goes to show that they might have a lot of stuff on Binance. So yeah, I had some funds on Binance because that's one of the places I was using to buy. I got that out there real quick. It took me like 20 minutes after I heard the news. I was like, all right, I'm gonna get my money off there before it's too late. So I had money on there because you need an exchange to buy Bitcoin, right? Or an on-ramp provider to buy Bitcoin. So I went on there and took all the Bitcoin that I had on that exchange server and moved it over to my hardware wallet. Yeah, I messaged Jason. I was like, Jason, you gotta go move your money, dude. Because yeah, like this is the kind of thing where like people forget about it. Like say, and this is one of the main reasons why they say why the saying goes like, not your keys, not your crypto, right? When you buy Bitcoin and you leave it at the exchange where you bought it from, whether it's Coinbase, Binance, wherever you're using, and you leave it on the exchange, if that exchange goes bankrupt or if it gets seized by the government, like Binance might be about to get something like that, then at that moment they cut off the internet access to it, which is how you would get into it and withdraw, right? So it's not in your possession. Like you need Coinbase's permission or Binance's permission to access your own money, right? That's why it's not your money, not your keys, not your crypto, right? So but you need to have that there as an intermediary because you're gonna buy it. You're gonna send your cash from your bank to an exchange, and then that exchange uses that money to buy you your Bitcoin or buy you the thing that you're asking for, the coins that you're buying, right? Once you buy that Bitcoin, it shows up on their, if Binance goes, there will be a huge sell-off, probably. Probably, Salty. And then if Binance keeps all of their customers' Bitcoin, they'll probably sell it and try to make up that money like that they're losing, right? Yeah, it's crazy, dude. Like, yeah, swing trading right now would be kind of treacherous, right? So anyway, what you do is you take your coin, you buy your coins at the exchange, and as soon as you clear, like for example, some exchanges won't let you withdraw if you just deposited like $100 and you bought $100 worth of Bitcoin. You can't take that off the exchange for like sometimes 5 days, sometimes 7 days, right? So that's where that's like the risk. You risk those 5 days to 7 days when they actually release it. Once the transaction from your bank clears to the exchange, then they'll let you have withdrawal options, right? But when you deposit it from your bank into the exchange, they usually let you spend it right away. They let you buy whatever coin you want right away. You just can't withdraw it for that waiting period, right? But anyway, as soon as that waiting period clears, guys, you got to get that off there. If you've never done it before, you've never transferred Bitcoin from one wallet to another. It sounds super complicated, but it's super easy. Writing an email is more difficult than transferring Bitcoin from one wallet to another, if you know what you're doing. Okay. Not this week, but next week we'll do some transfers online. I'll do some transfers next week, so you can see what it looks like if it's your first time dabbling in it, right? And then also if you have any money or if you have any cash at Binance, any coins at Binance, you got to get that out of there, guys. You got to get that moving, because if it's true that they're just waiting for a judge to get assigned to their case so that they can petition the judge for a temporary restraining order, then it means you got, according to that news article I saw, it takes around 48 hours for that process to go through, and then being able to seize or like to freeze assets. So you have some time to withdraw your stuff if you have money there. If you happen to have made a deposit like just today, and you have to wait for the 5 days for it to clear, it's probably not gonna make it, or something. I don't know. I don't want to scare you guys, but just get the stuff you can off there as soon as possible. Okay. Yeah, I think. Yeah, see, Jason, I wouldn't even put it. Yeah. I guess if you're gonna be trading, it's fine. That makes sense. But like at this point, man, I haven't done so well with trading Bitcoin that I feel like it's better for me just to buy it and hold it, and just keep buying it and forget about trading it, because it takes up so much time to trade it. It takes up so much focus, and I don't want to do that. I want to do other things. I just want to have and hold Bitcoin and build up my stash, build up my Satoshis, and then I can go about my life, live my life. I didn't even do any sound effects today. Dang, slacking, dude, slacking. All right, so that's what I got for you guys today. It took me like an hour to update. Oh, geez. Is that the deformer? That's funny. So next week, this week we're gonna focus on the properties of money, and we're gonna do how Bitcoin meets the properties of true money, which are durability, portability, fungibility, scarcity, divisibility, and recognizability. We're gonna do those this week, but unfortunately, we're only gonna do the first two, and then we'll finish the rest next week. Tomorrow I'll probably do portability and fungibility, so there's two of them. I don't know, you know what? Actually, I'm gonna prepare and see if I can get all of them done tomorrow. If we could do portability, fungibility, scarcity, divisibility, and recognizability, and that way we can knock all that out in one episode, and then next week we'll start learning about the Lightning Network. Okay. It's called a layer 2. So if Bitcoin is a layer 1, like the base, like the main layer, Lightning is a way to transfer Bitcoin between people without having to pay the transaction fee on the main chain, on the main network. It's kind of I'll explain how it works next week, and I'm gonna have you guys get some Lightning wallets, and I'm gonna be giving away some Satoshis, so it's gonna be cool. So if you're watching, come back next week. I'll be back here tomorrow. I'll remind you guys tomorrow that what we're doing next week, and I'm gonna try to incorporate this. I'm gonna try to incorporate like the Lightning wallet, and like giving out Satoshis, as a way to like reward you guys for showing up and supporting. Because we're learning to stack sats, so what better way to stack sats than to get some sats from me? Okay, like I don't need to wait for YouTube to approve any kind of monetization or anything like that. It's outside of YouTube. It's perfect. It works outside of any social media, and it works in real life because there's some vendors that are starting to take Lightning payments, which means you have a Lightning wallet on your phone. You scan a QR code, you pay instantly, and it goes through like in a split second, and it settles. Like there's no there's no big drawbacks to it, right? Like the vendor doesn't need to pay the credit card fees to run a transaction, so they don't have to inflate their prices. And as soon as you pay them, they have their money instantly. It's not like they gotta wait the 20 or 30 days for it to potentially back charge them, right? It's just instant. It's permanent, and there's no chargebacks. It's pretty cool from both the person paying's perspective and from the person getting paid. It's a really cool system, but it's just hard to implement because a lot of people don't know about it yet. But as soon as it gets more traction, it's gonna be good. Again, like you can transfer money between friends. Like, yeah, you can do that with WhatsApp. No, not WhatsApp. With what's it called? Venmo and PayPal, right? But that still requires two third parties, your bank and their bank. Oh, actually, was it 3 third parties? Your bank, their bank, and Venmo all have to know who you are and that you're sending money to each other and why you're sending money to each other, all that stuff, right? So it's like it's not private, right? In a Lightning transaction or a Bitcoin transaction, you don't have to give up all your information just to send somebody money. Just like as if I was going to give you like a $20 bill, I could just hand you a $20 bill. I don't have to tell you who I am. I don't want to tell you what my address is, what my email is, just to give you a $20 bill, right? Well, it's kind of the same thing with Bitcoin and with a Lightning wallet. You want to give somebody some Satoshis. You say, hey, what's your, send me a QR code, send me an invoice for the Satoshis I owe you, right? And then that person just sends you a little invoice. It has nothing to do with their user ID or anything. It just shows the wallet address that you're going to send the SATS to. And then, boom, they pay it and they send it out, right? You should just have a QR code in the yeah, we'll set those up tomorrow. We'll set those up next week when I have more time. We'll set those up. I'm probably going to put a QR code here somewhere. And then if you want me to send you SATS so you can test it, I'll send you SATS live during the show. And then if you want to send me SATS, I'm going to put something here that pops up at the end so we could do like the chat version, the chat part, the Q&A part will be us messing around with the actual technology, right? And then asking questions, answering questions, that kind of stuff. So if you're new to Bitcoin and you're new to the Lightning Network and using wallets and stuff, it'll be a cool way for you to get into it. You don't even have to use any of your money because I'll be sending you your first 1,000 SATs. I know it sounds like a lot, $1,000, right? But it's not $1,000. It's 1,000 SATs. So it's less than $1. It's about 30 cents, 25 cents. But it's cool because you can send out one SAT at a time if you want to, right? And the fees are so small on the Lightning Network. Sometimes it'll be like, well, 1 SAT fee, but most of the time it's no fee, right? But anyway, that's what we're doing next week. And then I'll see you guys tomorrow for another I guess DCA, right? Another DCA for tomorrow, and that's it. So we can send you SATs to support. Oh, nice. That'd be sweet, Jason. Yeah, I'll set that up. But what I'll end up doing with those SATs is giving them out to people that are new to the show, like people that don't have a Lightning wallet, right? People that don't have an address yet, just to get you like started, right? And again, we'll explain what the Lightning Network is and all that good stuff, and then we'll download the stuff. And if we could do it live during the shows, it'll be fun. Yeah, it'll be fun. And then later on down the road, Jason, like I have my kids on they have their own little Lightning wallets. And then I set up my wife with a Lightning wallet, and we have a little private. It's called Uncle Jim server. It's basically a way of saying that like all the Satoshis between me, my wife, and my kids, they're within one Lightning node, one Lightning server. And so when we pass it along to each other, it doesn't cost us any fees because it's on my server. So it doesn't cost us any fees. And then if my kid was to lose his phone, I have custody of his SATs, so I can restore his phone and he's back in business. He's not gonna actually lose the Satoshis, right? Yeah, Strike Wallet can a Strike Wallet do Lightning transactions? I'll have to double check. Usually we do a wallet of Satoshi. Zeus wallet if you have your own node, and I'll explain all that stuff next week. Next week's gonna be fun, right? But it's just another way to get into it. And then those satoshis that you get from the show, I mean, it's only 30 cents, right? But you can use them down the road for like, hey, it might be like the guy that bought like a pizza with like however many Bitcoin, right? And then like, was it 10 years later, 10 years, 10, 20, 10, 20, 15 years later, whatever it was. People are like, oh man, this guy paid so much for these pizzas, blah, 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 right? I'll be like the guy that's like, oh man, this guy gave away so many satoshis. Now one satoshi's worth $1. This guy gave away $1,000 each time, right? I don't know. It could happen. It could happen, right? All right. So, if it does do Lightning payments, then you can use that wallet. That'll work. All right, gentlemen. You guys have a great night. I will talk to you guys tomorrow. Right? And yeah, that's cool. Yeah, imagine the $1 SATS. Ding! Yeah, $1 SATS wouldn't be. What would you do? What would you do? Well, next Friday, let me know what you're gonna do when Bitcoin hits 1 million. Okay. Good night. Good night, guys. Thanks again for tuning in. Oh, it's so funny.